Crosstalk. I'm Peter Lavelle. Too big to fail, especially if you're wealthy? Governments around the world have bailed out the rich and powerful. For them, the worst of the recession is probably over. But that cannot be said for the middle class and poor. It would appear that socialism does exist, though only for the rich. To discuss government policies towards the rich, I'm joined by Doug Henwood in New York. He is the editor of Left Business Observer. Also in New York, we have Andrew Schiff. He's Director of Communications and Marketing at Euro-Pacific Capital and author of the illustrated book, How an Economy Grows and How It Crashes. And in Singapore, we go to Jim Rogers. He's an author and financial commentator, and another member of our Crosstalk team, Yelena Hanga. All right, gentlemen, Crosstalk rules in effect. That means you can jump in anytime you want, and I seriously encourage you to do that. Doug Henwood, during the midterm elections, the Tea Party people saying that Obama is building a socialist state. Okay, but on the other side of the political spectrum, a lot of people are saying that there is a welfare state, but it is for the rich. It is not for it's for a very small segment of the population in the United States, and it's been built for over the last 40 years, and they continue to benefit very much from the state. How do you react to that?
Well, there's some truth to it. Certainly, Obama, the caricature of Obama as some sort of foreign-born anti-colonial socialist is ludicrous. But he certainly has participated very aggressively in the policy trend of the last couple of decades, which is to let the rich do whatever they want to, particularly Wall Street do whatever it wants to, and then when it hits a wall, to bail it out. We've seen successive bailouts, and the state bailout managers have gotten very skilled to the routine. I think this one was much bigger than anything they bargained for. But if you go back to the origins of deposit insurance and such in the 1930s, it was intended to protect small depositors. But that whole system, which is intended to prevent a rerun of the 1930s, when 10,000 banks failed and drove the country into, much of the world, into a decade-long depression. We're trying to do everything in policy to prevent that from happening again. But the emphasis has moved from protecting depositors and actually preserving the system to preserving the wealth of the rich. Wall Street is just, it's like good old days for Wall Street. Bonuses are almost as big as ever. The stock market not doing so great, but doing pretty well. Bond market has been doing quite well. The Federal Reserve now moving in to buy a lot of long-term bonds, and I can understand why they're doing it, but it just looks and acts and feels like everything is being done. The full power of the state is being mobilized to bail out rich people, while the middle and lower income brackets enjoy almost nothing. I mean, about two-thirds of the benefits of economic growth over the past decade went to the top 1% of the income distribution. The bottom 90% of the population got about 20%. The mass of Americans have not participated in anything resembling prosperity for several decades. And this is just doesn't seem like any kind of social emergency. What is a social emergency is when Wall Street hits a wall and the state has to be mobilized to save them. But the rest of the population can live with 10% unemployment by official measures, close to 20 probably in real terms, and they can just hang it. And now we have a new Republican wave in Congress. We've got some Congress people actually trying to remove the Federal Reserve has a dual mandate, that is to preserve full employment and price stability. We have some Republicans now looking to remove the full employment part of the Fed's mandate and just focus on price stability. Why people are worrying about inflation at this point is just insane. The economy is in bad
kind of
shape,
ludicrous.
Imploding for most people,
Jim,
and can't get off the mat.
Jim, if I can go to you in Singapore, is the mandate of the modern industrialized state in the West to protect the wealth of rich people? Because in the United States, over the last few decades, it seems to be exactly that, to protect their wealth, because they've certainly gotten very, very rich over the last decade.
Well, it's certainly been in the last 2 or 3 years that they've been bailing out Wall Street, which is totally outrageous. I cannot believe the taxpayers are letting them get away with it. I can't believe that anybody would let them get away with it. It's happening in the UK as well. It's not just happening in America, I'm afraid. It's happening in lots of places. But to Mr. Henwood's point, I would have to point out that a lot of the money which the government has been spending in the last 2 or 3 years has been going to the middle class. I mean, 40% of it went to preserve the jobs of bureaucrats at the state levels around the country. Now, you may be in favor of bureaucrats or you may not, but it's hard to say that bureaucrats are the rich and Wall Street fat cats.
And cops,
so many people have been receiving this money, none of whom should have received it, if you ask me. But unfortunately, we have a government now which likes to buy votes from anybody, buy votes and buy patronage from anybody it can.
What do you think about that, Andrew? I mean, you know, the last election kind of showed that. I mean, you don't have to have any kind of disclosure right now. The Koch brothers, they spend, some people say, over $100 million supporting their candidates to protect their interests, okay? Again, to get the state to pass legislation to protect their wealth. That's what some people would say. Andrew, go ahead.
Well, their interests are keeping the country safe for business. And they do have some private interests, but I think there's plenty of money being spent on the other side. I think it's interesting to think that the rich that rich don't pay anything for the society. Of course, we do have a progressive tax system. The rich pay far more in taxes than the middle class. The vast majority of citizens in the United States don't pay any income taxes at all. So there is a massive transfer of wealth. And it's interesting you call that a giveaway for the rich is allowing them to keep more of their money. But yes, in the last few years, there have been bailouts in Wall Street. It's benefited Wall Street. I agree with Jim. It's a tragedy. But those bailouts were made not to save the rich, but to keep interest rates low, to keep the financial edifice from collapsing, which would have raised interest rates. And we have a society addicted to low interest rates, not just for the rich people, but poor people, middle-class people in this country survive on low interest rates. And rather than letting interest rates rise and people having to live off of savings, which they don't have, the government stepped in and bailed out Wall Street tragically, Andrew, to keep interest rates low.
Jim, jump in. Go ahead.
Andrew, wait a minute, Andrew. Wait a minute, Andrew. Taking interest rates to zero is destroying the class of people in America who save and invest for the future. Tens of millions of Americans didn't get into financial trouble, didn't buy 6 houses with no money down and no job. And the people who did the right thing, who saved their money, didn't get in trouble, now are being wiped out by the Federal Reserve and the central government because they've got interest rates at zero. All of these people who thought they could live off their interest or their savings are now being totally wiped out. Whenever a country wipes out its savings class, it's finished.
I agree. I'm not saying I think they did the right thing. I mean, we have an economy addicted to cheap money.
Savings. I mean, most people should have to work for their living.
Go ahead, Doug. I was hoping you'd jump in. Go ahead.
Low interest rates are supposed to encourage investment.
It's okay to steal someone's savings?
Low interest rates are supposed to encourage investment. They're not. Low interest rates are supposed to encourage investment by corporations. Corporations have $1 trillion in their balance sheet right now that they're not investing because the economy is so weak. And something has to be done about that. Investors do not want to invest because the economy is weak and they're scared of losing money. I mean, that's the fundamental problem. The prospects for our future economy are terrible, and that's why they're not hiring, they're not investing.
They're only terrible as long as the government continues to...
can't clip coupons is delusional.
Andrew, you wanted to jump in there? Go ahead.
Well, the only reason the economy remains terrible is because most of the capital is flowing towards the public sector. I mean, if the government will allow, first of all, a real economic contraction to take place, and we can get down and we can wring out some of this bad debt,
what do you mean by real
find a bottom in the housing market.
Unemployment. You want 20% unemployment? Is that what we need? 20% unemployment?
Look, Mr. Henry, we have made some horrible mistakes in America in the past 20 years.
We've got some.
Go ahead, Doug. You finish up and go to Jim. Go ahead, Doug. Go ahead.
In Europe right now. We've got some laboratories of austerity in Europe right now. Ireland is undergoing a vigorous austerity program. It's doing exactly what I think you would like to do. I see budget cutting, and also Greece is doing the same, deep budget cutting. All right, what are we getting for that? High unemployment. The Irish unemployment rate is 15% and rising. The economy is collapsing. It's contracted by 25% in the last couple of years. Britain now is undergoing a big austerity program. It's leading to implosion too. I mean, this austerity scheme does not work.
We had a 20-year stock market bubble, followed by
Mr. Henwood.
Go ahead,
Jim, go ahead. Go ahead in Singapore.
Mr.
Go ahead.
Mr. Henwood, in the United States in the past 20 or 30 years, as you were pointing out, we've had some unbelievable dislocations. We have done things which no country in the world should do. We have run up debts which we can never, ever pay off, no matter how hard we try or what the politicians say. And you say we don't have to have a recovery from that? I mean, when you have a long hangover, you've got to recover. When you have a long illness, you have to whenever you make mistakes, Mr. Henwood, somebody's got to pay for those mistakes. And it should be the rich, and we shouldn't have bailed out the rich. We should have let them go bankrupt.
The debt...
Go ahead, Doug. Go ahead.
What?
The debt levels in the United States, public debt. The government debt in the United States is not excessively crazy. I mean, it's entirely manageable.
Oh, my God.
The debt GDP ratio in the United States is not outlandish by international standards.
It's not entirely manageable.
We don't have a problem for at least 20 years, according to the official projections from the CBO. So this sense of emergency that we have to cut in order to get out of a debt problem is delusional, and it's going to cause immense poverty and unemployment and despair.
Go ahead, Jim.
What do you think the debt is in the United States?
The debt problem is at the household level.
What do you think the debt is in the United States that you say is not unmanageable? It's the highest of any. We're the highest debtor nation in the world.
If you throw in the Fannie and Freddie debt, which should be on the federal government's balance sheet, because Fannie and Freddie are federal entities at this point, we'd have higher debt levels than Greece. And now all mortgage debt is government debt.
What are you talking about, Mr. Henwood?
Doug, you want to jump in there?
We're the largest international debtor in the whole world.
Doug, you want to jump in there? Go ahead.
Yeah. Now, the real problem in debt in the United States is the household debt. The government debt is entirely manageable. It's not a problem. We could tax the other folks on this program.
Oh yeah, you know, we're already paying 50% of our income taxes. I mean, how much more do you think you can tax the rest of the country?
That's nonsense. Nobody's paying 50%. No one is paying 50%. That's nonsense.
So you're not? You want to see my tax return? Would you like to take a look at it?
Yes, I would like to see your tax return.
50%
No one is paying 50%.
You want me to tell you how much I'm paying? I'm paying 38% to 33% to the Fed.
What's your income?
I'm paying 9% to the City of New York. I pay 10% to the State of New York. I pay 6% or 6.5% to Social Security, and then I haven't even talked about my sales taxes or my property taxes.
Mr. Henwood, 50% of the people in America. Mr. Henwood, 50% of the people in the United States don't pay any tax at all. Any tax at all. It's left to the other 50%. But let me go back to your debt question, because I'm stunned.
That's not true.
I'm stunned that you would claim what you said. You claim that America doesn't have any. We're the largest international debtor in the history of the world. Nobody in history has ever owed as much as we do on the international market.
All right, gentlemen, please let me jump in here. I'm really glad everyone's taking crosstalk rules to heart here, but after a short break, we'll continue our discussion on the rich. Stay with RT.
It was created to serve public interests, to inform and to entertain. These days, there's nothing easier than opening a new media outlet, but there is nothing harder than revoking its license in case of corruption.
What was bound to happen when just one point of view was sent out on the airways, controlled by all too few? It's the broadcast blue.
You can end up in a community where you have one large corporation owning the daily newspaper, radio stations, television stations, the cable outlet. Now you tell me that that sounds like democracy.
Public opinion versus FCC. Broadcast Blues on RT. The close-up team has been to the Tomsk region, where rich academic life gives birth to innovative ideas. Now RT goes to the area which, together with boosting industrial development, offers to make a journey into Russia's history and to enjoy diverse and vivid culture life. Welcome to the Perm region, Russia Close-Up on RT.
Welcome back to Crosstalk. I'm Peter Lavelle. To remind you, we're talking about the so-called socialism for the rich. But before, let's see what Russians think about taxing the wealthy.
Governments all over the world claim they've gone to the limits, tried everything, but the results are still the same. The rich are getting richer, while the poor struggle to preserve what they have. As a result, many are considering raising taxes for the rich. The Russian Public Opinion Research Center asked citizens if they support raising the tax burden of the wealthy. 57% of those polled would have high earners pay more dues, while 28% opposed raising the tax burden. What was not clear, however, is how much poll respondents themselves earn. Back to you, Peter.
Okay, Doug, I'd like to go back to you. A lot of people say that taxing the rich hurts job creation. There's a direct correlation between the two. So George W. Bush cut taxes for the top 2% of American earners, and during his presidency, the country lost 8 million jobs. So what's going on here? Because I think a lot of people would say the middle class needs a tax break. Does the top 2% of the population need a tax break? Go ahead.
No, the top 2% of the population has been raking it in and been taxed very lightly for it. The Bush tax cuts that happened early in the decade preceded the weakest expansion in modern American history, the weakest GDP growth, the weakest growth in employment of any of the 11 post-World War II expansions. So we go back to the 90s. The first thing that Bill Clinton did in office was to raise taxes in the top 2% of the population, and that preceded quite a long boom, which saw vigorous job creation, but also across-the-board income gains. For the first time since the early 1970s, every demographic group, every income level saw strong real income gains for the late part of the 90s. We haven't seen anything like that in the last 30, 35 years.
Doug,
Andrew, go ahead.
I don't know what you think.
Comparing those two policy approaches, taxing the rich is a good thing.
Andrew, go ahead. Your shot.
Doug, I don't know what you consider to be. I don't know what you consider to be light. I don't consider 50% to be light. But you know, it's interesting that, and there are more factors that go into economic growth than taxes. To make a direct causality between the tax rates and economic growth is overly simplistic. There's many other factors. But you know, the only sector that really grew, most of the new income over the last 20 years went to the financial sector, and that's where all the new income was. And certainly the people on Wall Street have made obscene amounts of money. But the reason why they were able to do that was because the government has been making money so cheap. The money business is so great because the government subsidizes it. If the government didn't subsidize the money business by lowering interest rates far too low and backstopping investment houses, there wouldn't be that much money there. So I think it's a government policy, and I don't think they do it to benefit the rich. They do it to keep the credit flowing. They do it to keep America addicted to credit, and that's what's made so much money for Wall Street. And I think that should go away.
But how about you, Jim, in Singapore?
I don't disagree with that. It's interesting that
I want to go back to Mr. Hinwood. Mr. Hinwood said before that people should not be.
Go ahead, Jim. Go ahead.
Mr. Hinwood said before that people. Mr. Hinwood said before that people who save their money shouldn't be allowed to earn interest on it. I must say there are tens of millions of Americans who are retirees, my mother being one of them who's 91 years old, who would love to get some income from her savings. And Mr. Hinwood says she's despicable for earning money on her pitiful savings so that she can eat.
I don't recall my saying that.
Gentlemen,
it's staggering. It's staggering that Mr. Hinwood would say people should not get interest on their savings.
Jim,
I cannot believe anybody would say that.
Let Doug explain his comment. He'd like to explain it, if he's indeed said it. Go ahead, Doug.
My point was there is no God-given right to earn a large income on savings. I mean, low interest rates are absolutely essential to get this economy off the mat.
People don't have a right to their money.
Rates now, we're going to end up like Ireland.
So basically, Mr. Hinwood, property rights don't really matter.
So in other words, Mr. Hinwood,
what they produce, they have a right to their money in that sense.
Andrew? So, Mr. Hinwood, all the people who saved
I'd like to
should not have any bearing.
Jim, go ahead. Go ahead.
You're saying that all the people. You're saying that all the people who saved and the retirees should have nothing to show for it at all. Just go to their grave poor, with no income and nothing. Who's going to pay for their funeral, by the way? And second, I mean, the idea that low interest rates are going to. The idea that low interest rates are going to save us is totally false. The Japanese have been trying it for 20 years. They're still trying to recover. The problem is we, America and Japan, keep trying to bail out all the fat cats and the incompetents. All the incompetent people who made mistakes in the past 20 years are being propped up. We're not letting them go bankrupt. How can we possibly have a just system when failure is rewarded?
We need to have a depression to clear off. What you're effectively saying is we need to raise interest rates so that the minority of the population that has a large amount of savings can rake it in, while the rest of the public, who's either debtors, most of whom are debtors, will have to suffer.
You want an inflationary system.
You're talking about recreating a 1930s. You're looking for a deflationary depression.
Yeah,
most people would suffer under a
You want a
regime.
system where everyone who You want a system where everyone who saved money gets wiped out and everyone who owes money gets bailed out. And that works in a society like ours where
people who
everybody...
work for a living get a good deal.
Okay.
Mr. Henwood, it didn't work in Japan.
You want to wipe out savings.
Japan has been trying it for 20 years.
You'll never get growth because savings actually comes from savings.
Japan is stagnant, but it hasn't collapsed.
What you want is
they don't have
look
a 15%
what happened to the poor North Koreans.
Growth doesn't come from savings; it comes from investment.
No, where do you think investment comes from? It comes from savings. Comes from savings. If you just print the money for investing, you don't do anything that way.
Mostly from corporations. Investment comes from corporations who reinvest their profits. Do you ever read the flow of funds accounts? I read this stuff. I know what I'm talking about. Real investment and real employment comes from the profits of business, which are generated internally. They do not turn outside very much for the savings of your mother.
It's a lot simpler than that.
Mr. Henwood, I'm sorry to tell you, but
it's got to clean this up, guys. Let's go to Jim in Singapore. Go ahead.
Even socialist economists say that savings leads to investment. Where do you think investment comes from? You think it comes from the tooth fairy? You think it falls out of the sky? You have to have somebody saving so that can lead to investment. I mean, even Krugman knows that. I mean, what is this?
Doug?
Let
Doug go. Doug, go ahead. Go ahead, Doug.
Let's not get into that.
Go ahead, Doug.
But Mike, I say the real investment in buildings and machinery, the kind of things that make an economy grow and be productive, come from corporate profits. Corporate profits that is, corporations fund almost all their investment internally. Over the long term, about 90% of corporate investment comes from corporate profits. It has nothing to do with all these cute little stories about old ladies living on their retirement savings. That's just not the way it works. I mean, I know the flow of funds accounts. I know the flow of money in the economy. I know what I'm talking about. This is just absolute fact. I mean, they can rant and rave and repeat received ideology all they want to, but that's just not the way, these Calvinist homilies, but that's not the way things really work.
Okay, Andrew, you wanted to jump in there. Andrew's been very patient. Go ahead.
I mean, well, I was going to talk about, we were a while ago talking about savings, and I was going to mention the North Koreans, who managed to work outside of the system, entrepreneurs and selling vegetables in the illegal markets there, and they save their whole lives to get a little bit of money together. And one day the government decides that they want to print some more money and devalue their currency so they can spend new money into their system, and they completely destroyed the life savings of everybody who had been working their whole lives.
Andrew, it's very interesting you bring up that point, because so you're making an analogy. The United States is like North Korea in the way its currency policy. Is that what you're saying?
You were talking about the sanctity of savings.
I have hardly said anything during this program. I've let you guys talk, okay? I mean, again, it's about management of the economy here and currency flows, as Doug has pointed out. Go ahead, Andrew.
What? Oh, I'm sorry.
No. I mean, the comparison of North Korea and the United States, and it's.
I was just talking about. Doug was talking about. He brought up the the sanctity of savings and why should people have a right to their savings or a right to interest. And I was saying, like, take it to obviously it's an extreme example, but look what happens in a place like North Korea, where all of a sudden their savings get wiped out overnight because of government policy, and they want to spend new money into the economy. I mean, how could you possibly justify that? Obviously, you can't. But that's that policy taken to its extreme. Now, in terms of his point about corporate profits,
desperation.
Okay.
No, I'm not. I mean, you brought up who has a right to their savings, so I'm saying, well, look, we'll take that to extreme and see what happened in North Korea, and we're doing that here, but in a much slower fashion. I mean, it used to be when Franklin said a penny saved was a penny earned. I mean, he wasn't a moron. He wasn't a fool. People think that now. It kind of sounds stupid, but back then, I mean, the natural order of prices in an economy should be to go down. If you have a stable money supply and increase in productivity, which is what you'd have in a growing economy, prices will come down over time, like they did in the United States between 1789 and 1913. Prices came steadily down. We had sustained deflation in this country, coupled with robust economic growth. So you don't need inflation to have economic growth.
Well, you also
deflation
had a big populist
is
movement and a big urban labor radical and socialist movement, because that kind of deflationary environment is incredibly punishing to everybody who isn't a creditor.
Mm-hmm. No, but you know what? We had incredible growth in this country, not just for the upper class, but for the middle class. We invented the middle class. We invented the ease and the comfort of. In the 19th century, things went from subsistence level to, we were the wealthiest country in the world by 1910, 1915. And that was based on the hard work we did in the 19th century. We were doing in the 19th century what China is doing today.
All right, gentlemen, I want to go to Jim Rogers because we're almost running out of time. What's the future of the middle class in the United States? Jim, you got 1 minute. Go ahead.
Well, it's being wiped out by the government, by low interest rates and by gigantic debt, which nobody can finance. The foreigners are going to give up on us soon, and then what do we do?
Doug, what do you think? What's the future of the middle class?
It's not very good unless we actually start investing and get the money out of the hands of financiers and into actual productive investment.
Okay, and last word goes to Andrew. What's the future of the middle class?
Well, who's going to decide where that productive money goes to? If the government decides what the industries we need to fund, they're not going to work because the government has no sense of what is productive and what isn't productive. You got to leave those decisions in the hand of
It's working
the
pretty well
sector.
in China.
Okay, it's working pretty well in China.
Well, the private sector, they're communist in name only. They're communist in their political class, but their economy is run by entrepreneurs and business people.
Okay, on that note,
China's
gentlemen.
more capitalist than America.
Okay, we'll do a program on that in the future. What's more capitalistic, China or the United States? Many thanks to my guests today in New York and in Singapore, and thanks to our viewers for watching us here at RT. See you next time, and remember, crosstalk rules.